I think that gold has got a lot going for it. I think we're looking at new levels. And as I said, I would like to see a correction at some point. It would be healthy, but I'd like to see it come down maybe to 2,600. My target, and then lastly, my target of 2865. We've hit 28. If that's all we get, I am completely satisfied. It didn't hit my target, but it certainly went really close to it. Every time we've seen dips in gold recently, traders have come in and bought that, used that as an opportunity. So a deeper sell-off would really entice investors that felt they kind of missed the boat on this first huge parabolic move. And you would find that particular price point getting filled quickly and moving back higher, yes.
Gold prices experienced a pullback, falling from a record high of almost $2,800 per ounce in late October to around $2,701 as the US dollar strengthened. This decline reflects the impact of a rising dollar, which continues to gain momentum and presents potential near-term downside risks for gold. In a dramatic turn, former President Donald Trump declared victory in the presidential race, celebrating alongside his running mate Senator JD Vance and his family. This announcement helped propel the dollar's rally, as Trump's claimed win has garnered broad support. According to Gary Wagner, editor of the Gold Forecast, the recent price decline may lead some short-term traders to take profits. He believes any dip to around $2,600 could attract buyers who may have missed gold's initial surge. Wagner notes that, despite the potential for a deeper correction due to the rapid price rise, gold's fundamental outlook remains strong. He expects a pullback to prompt renewed buying interest, especially as traders have shown a pattern of quickly purchasing dips. Adding to the complexity, heightened U.S. deficit spending and expectations for a more cautious approach to rate cuts by the Federal Reserve are pushing Treasury bond yields higher. This uptick in yields has created additional headwinds for gold, which does not offer yields, and has driven some investors to seek higher bond returns. The risk-on sentiment, signaled by a robust rally in U.S. equity futures, also suggests that the path of least resistance for the safe haven metal may be downward soon. The close and highly contested presidential race, with ongoing absentee ballot counts, could add further volatility. A delayed outcome might trigger renewed demand for gold as a safe haven asset, potentially stabilizing prices around $2,740 per ounce as markets wait for clarity. Combined with the upcoming Federal Reserve statement, the election's influence on gold remains a focal point for investors. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
On a technical basis, it's hard to say. If we could put up, I have a monthly chart that we've prepared. If we could put it up, I'll tell you why it's very difficult to talk about the floor, and I see that that's come up. You can see that over the last year or maybe 8 months, it's gone parabolic. You've got almost a straight line from January 24, when it was sitting at $2,000, up to now, which is just, and we're looking at spot gold, by the way, of about $2,700. Absolute floor, if you look on a technical basis, it's this triple top that occurred at 2000. Do I think it would go that low? I do not. But if we go back to the middle of 2011, when gold ran virtually from 1,000 to 1,900, by the middle of 2011, from 2011 to the end of 2015, it moved back down to 1,020. It halved. So is it possible at all? Well, we've seen that historically happen. Typically, a parabolic rise up is followed by a pretty dramatic fall down. And whether or not that happens, we'll have to see. But the one thing that myself, as well as other analysts, have talked about is gold has moved up so quickly, so strongly, that it's almost given at least short-term traders the desire to find a place to just whack it, to pull profits. But the underlying things that have been supporting gold and taking it higher, which is the election and geopolitical tensions worldwide, because inflation is starting to tick down, as long as that geopolitical, the problems that exist remain, that will be highly supportive. And so in terms of a level of support, even a pullback to 2,600 would be realistic. It wouldn't surprise me. A pullback well below that could happen because of the way it went up parabolically. But to me, fundamentally, and I am a technician, but I'm a hybrid technician. I look at fundamentals first and then use the technicals for placement, where to enter and where to exit, what's logical support and resistance levels. I don't see there being tremendous pressure to the downside to take it to technical support, which when you looked at that monthly chart, you can see that triple top that comes in right around 2000. I don't see it going back down 700, but that's the strong level of technical support. But it is the fact that it's moved up parabolically that puts up my alarm buzzard, so to speak, to be careful and watch for something that might create a rationale or reason to really sell into the market. I think that gold has got a lot going for it. I think we're looking at new levels. And as I said, I would like to see a correction at some point that would be healthy, but I'd like to see it come down maybe to 2,600.
Oh, interesting.
My target of 18, and then lastly, my target of 28.65. We've hit 28. If that's all we get, I am completely satisfied. It didn't hit my target, but it certainly went really close to it. Recently, what we have seen is even when it went down, and now I'm quoting futures pricing, when it went down to around 30, they bought the dip. There was, every time we've seen dips in gold recently, traders have come in and bought that, used that as an opportunity. So a deeper sell-off would really entice investors that felt they kind of missed the boat on this first huge parabolic move. And you would find that particular price point getting filled quickly and moving back higher, yes.
Donald Trump claimed victory in the 2024 presidential race after Fox News projected his win over Democrat Kamala Harris, marking a remarkable political comeback 4 years after leaving the White House. Following the announcement, U.S. gold futures dropped by 0.7% to $2,730.20, while the dollar surged to a 4-month high, making gold more expensive for buyers using other currencies. Gold prices have historically risen during economic uncertainty, driven by high spending or inflationary policies. Trump's potential re-implementation of tariffs could add inflationary pressures. At the same time, Harris's fiscal reforms may increase the national debt, both factors supporting gold prices as investors seek safe haven assets. However, similar to the market response following Trump's 2016 win, the dollar and equities rallied, leading to a pullback in gold. Analysts suggest that if Trump's policies strengthen the dollar further, gold's upside could be limited, despite the underlying economic pressures. Let's get back to the interview.
Well, there's some interesting facts. I don't know that I can make or draw conclusions, but I did some research back to the Reagan administration in 1980. By inauguration, it went down 12% during his first term, minus 46% at the end of his first term. His second term, it went up 23%, but also down 10% from the election to inauguration day. In terms of what stands out is really J.W. Bush and Obama. With J.W. Bush during the two terms from 2000 to 2008, gold rose about 120%. Wow. That's pretty significant. And Obama, interestingly enough, in 2008, when he was elected, gold gained 18.5% between the time he was elected and the time he was inaugurated, and then went up 133% that year. The second year, it was unchanged between election day, when he got reelected, and inauguration, and it gained 23% over the next 4 years. The only other thing that might give us some indication, when Trump won in 2016, went down 5.4% between election day and inauguration, and up 47.9% that 4-year term. I look at it is the primary thing that we see gold react to is uncertainty. Mm-hmm. So the more certain the outcome, the less significant of a move we're going to see in gold. But the one thing that stands out, because we did have a term with Trump, and he stated that he will reenact tariffs, if Trump wins and tariffs come back into play, that is an inflationary pressure because American citizens are paying more for imported goods, obviously with tariffs, and therefore we could expect more pressure on inflation. How high it might go, where it might go, it's too early to tell. But we do know historically that when the government relies heavily on tariffs for imports of foreign goods, that creates inflationary pressure. And so that's the primary thing. The second thing, and I think it might be true for both candidates, is Trump spent a lot of money during his term in office and created a larger budget deficit. And a budget deficit, of course, has certain reactions in terms of the economy itself. But the Biden administration, and we can't extrapolate too much to the Harris administration, if that comes to pass, as much as we can say if she does revamp Medicare and if she revamps Medicare, that's a costly procedure, and that would add to the budget, and that would create more fiscal debt. And we know the problems with greater fiscal debt and the things we have to watch for and the uncertainty that that can create in terms of the economy. So that would be the best way I'm viewing the outcome with Trump and with Harris. With Harris, I'm concerned about too much fiscal spending. With Trump, I would be worried about too much fiscal spending as well as the effect of tariffs. I'm not going to venture to guess to say if it would or wouldn't happen, but what I can remark on is the fact that a unique component to the parabolic move that we've seen in gold recently, considering that by the end of 22 to currently, it went parabolic really almost this year. It's the most parabolic that I've ever seen it on a monthly chart. And the interesting thing is gold has gone parabolic and the dollar has been strong. And that's the relationship we've seen recently, which is dollar strength and strength in gold working in tandem. And that's a unique scenario considering that there's an inverse relationship between the dollar and gold. In fact, 100% negative correlation because of course, here and in Canada, we're pairing it against the dollar. If the dollar goes up, it has to take gold down an exact amount, which makes the moves up in gold more significant because they've overcome dollar strength. So that's how I would view that question.
Gold's recent pullback, driven by a stronger U.S. dollar and market optimism following the presidential race results, underscores the metal's sensitivity to shifts in political and economic climates. While short-term traders may seize the opportunity to profit, long-term buyers could find value in dips, maintaining gold's resilient role as a safe haven asset. The ongoing influence of U.S. fiscal policies, interest rates, and market sentiment will continue to shape the precious metal's trajectory. Given the current volatility and market factors, how should investors balance their gold holdings in the short term while preparing for long-term price fluctuations? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.